in the name for the
Oh, I didn't think
hello
of.
and welcome everyone on this community call, this video, whatever, however you're watching it, whether you're here with us today or not. We're going to be discussing trading mechanically versus trading with discretion. Now,
Very important subject.
yes, very important. Now, some of you may think that they're the same thing, and discretion is kind of both of them combined, but we're going to be discussing why they are both equally important, when you should be using discretion versus trading mechanically, and how they can be very easily confused with and can sometimes send you down a bad path.
Yeah.
So we're gonna start off by describing what mechanical trading is and discretional trading. And Ayrton, I'll let you describe what mechanical trading is off the bat.
Mechanical trading is probably the easiest one to describe, so thank you very much. And that is essentially just following the system to a T. For example, if your system for some reason was as simple as soon as Asia low is broken, buy. If that was your strategy, your mechanical strategy would be to do that every single time. So now over to Tom. I use the same example because I think that's a nice, easy example
Yeah.
uh, for what discretion would be.
So the discretionary explanation is discretion is you choose not to take every trade that your mechanical system gives you. So let's say it does take Asia low, and like Aaron said, that your strategy is to buy, let's say, but you've just seen that it had a perfect sell setup occur. You got a nice Asia sweep of the equal highs and market shift, blah, 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 blah. You are looking to short. Your discretion, your knowledge, your trading ability is going to tell you, okay, yes, my strategy says to buy, but I see price selling off. Let's say you've just filled the daily imbalance, hourly, and so on. Discretion tells you, okay, my system is offering me something, but I know my system well, I have experience. I'm going to choose not to take this.
Yeah.
So, pretty much, discretion is mechanical with intuition, is another way of also looking at it. Discretion is your intuition, it's kind of all your skills coming together, and a lot of time it's your intuition that tends to make you make a discretionary call.
Yeah. Wouldn't you
So,
be breaking your strategy though? That's a great question. Mechanically, you would. That is the th you are in essence breaking what you did in backtesting, and that's why we're going to get onto when you should be doing this. So, I'll start this off. When you should be doing this is not when you first start trading. So, if you're just starting to trade live, you've just got your funded account, you've just done your however many years of backtesting, just do your system. But say 6 months, a year down the line, you've seen this market over and over again, you've back tested it over and over again, then you will be able to pick up on things that are a reason that your system might not work. So, like Tom's saying, you might see something that opposes your system, and you might now think, I've seen this before. Most times this happens, it stops me out. And that would be a valid reason to not take it. And that's what it's about. It's about not taking trades.
and the best example, which I have experienced firsthand, and I'm sure you have as well, Ayrton, but I know I experienced it significantly more last year. I mean, feel free to say I'm wrong on that one. But with gold, I started trading bang on January 1st, a system which I back tested mechanically, knew what I was doing, the approach to the T. I was a robot for the first at least half the year. Now, it went well when conditions were well, where they were good. My strategy was working. I took all the trades I was offered, did my strategy as I back tested. And this worked great for January, February, March, April. Came to May, it slipped. June, significantly slipped. July, it slipped. And what I realized is that mechanically, your system, you have all these trades which you take in back testing, but with logic that you have from trading experience, goodbye, you realize that not every trade you should be taking. There are trades that you can avoid, and your system can give you poor setups. It can give you fake outs. Now, sometimes you can have setups that mechanically, via your strategy, there are things you can take. However, you have intuition that knows that although, yes, you might have, you're below Asia low, you've had a market structure shift, and you have a fair value gap. Technically, you have a setup. However, with your discretion, your intuition, your trading knowledge, that brain of yours which learns over time, you can see that maybe that's just a pullback. you can see maybe that is a V-shaped recovery. You can see that that's now going up to fill a 1 hour fair value gap. And you can see that, yes, you've got a valid setup, but that is going to most likely be taken out. So what I learned with gold is when I was taking the trades, I was following my system so mechanically to the point where I was just losing because I was just getting so many setups. Mechanically, I was getting basically just done by poor conditions because you'd get an Asia sweep, you'd get your market to shift, it fizzle out and just hit stop loss. Simple as. And what I learned was, okay, yes, Asia low or high gets swept quite a lot, especially with gold being volatile. And when gold's in poor conditions, it's volatile, but then often doesn't move or give reactive price action. So I'd get my setup, but then just get done dirty in essence. So using the knowledge I'd already have from the previous 6 months of trading it live, I understood that the best setups, the ones that most often hit take profit, worked, flew better, hit my point and reacted best, were those ones that had hourly fair value gaps, had a good 5 minute reaction, had maybe generated a previous market structure shift, liquidated that, and then done a market structure shift. You learn over time that through your strategy, you find these setups that maybe you have to wait and avoid one or two more setups that then offer a better one.
Yeah,
So discretion comes with time. And like we were saying, it's all about when. You don't jump straight into trading and go, yeah, I'm gonna just be I've seen all in back testing, I know which trades to and to not take. You have to also experience it live because it's very easy in our minds to get almost arrogant or think we're better than the markets, but we know it all. We don't know it all, and you do just have to experience things.
yeah.
So Ayrton, I believe you have a very good analogy for backtesting, kind of mentioning that about
Oh,
it's an all right analogy, I guess, about discretion and how you can learn from backtesting, but also I think it applies to live markets, doesn't it? Could you say?
yeah,
So,
yeah. So I think this quote is going to be used so much in the future that it might as well be put on my gravestone eventually. But so it takes us on to the topic of how, like, how do you develop discretion and how do you develop like a mechanical system? Both of these start at backtesting, and in fact, your mechanical system is pretty much only developed in backtesting, and this is where the analogy comes in. So your backtesting is your business book. In this business book, you'll hear lots of good stories, lots of wins, and you'll hear lots of losses. You will see these losses, and that doesn't mean that you should do those in the live market. You might see that every time you lose, or a lot of the times you lose, there's a certain structure that appears that makes your system invalidated. Don't do that in the live market. You can learn from that. It's the same with your business book. If you heard that some guy said, "Oh, you shouldn't invest in a life insurance company when it's at this point in the year," learn from that. That doesn't mean you should do that. You don't have to do everything you did in backtesting. And that's where you develop your discretion. So now that you've seen that your mechanical system fails at these points, you've done it live and you've felt this happen live, because that's something different about the live market. So you don't get in backtesting. You do have a feel for the markets because you're there essentially to watch every single price movement. Even if you're just watching 5 minute candles, you watched how that 5 minute candle formed. Whereas in back testing, it just prints, and just carries on. So in the live, we have a feel for this. So after a certain amount of time, that you now see, okay, this failed my system in back testing. This is now failing my system in the live markets. I think next time I see this, I'm gonna not take it. Then the next time you take it, hopefully you avoid an L. But it is possible that you avoid a W. And that doesn't mean that you've done the wrong thing. Because with discretion, it's not about getting in trades that you wouldn't take in back testing. It's about avoiding some of the trades that you would have taken. So just because you've avoided one that happened to be a W doesn't mean what you're doing is wrong. Because if you know that if you did that same thing on the last 10 times that setup formed, you would have saved yourself like 7 or 8 losses. If you're targeting 1 to 2 hours, then why would you take that every time? Because those losses significantly outweigh the times you've won.
it's another way of looking at it as well. You're protecting your peace, but also you're protecting your risk, your capital. You want to be taking trades you're happy risking, but then also you're happy losing. And when you view every trade as, I want this loss to be the best loss ever, it makes you take the best trades. So again, you might have your market structure shift, your fair value gap, Asia sweep, whatever it is you're looking for. But if you look at that trade and go, if this SLs, I'm going to look at myself in the mirror and be like, I saw that was going to sell. I knew it, but I took it because it was mechanical. That's then typically when you get to the point where you do shift to discretion because you have something within you that is saying, yes, fine, this is a setup. However, I've seen this half a million, dozen, trillion times, and I know this is going to most likely take me out. And like Aaron said, if it doesn't, then fine. But you can sit there happy knowing you've made the right decision, and you have to remind yourself, long term, that decision is going to profit you, it's going to benefit you. And taking trades, it's stress. It is
Yeah.
stress. At the end of the day, are you going to be happy taking a trade that you're unsure about sat there behind your desk? Yeah, 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 yeah. Or are you going to be happy like, nah, that's not a great setup. Would I take that if like my life depended on it? No, I'd wait for a better trade because most likely there's going to be a better one. And I do have an example actually that happened today in the live market of having a valid setup but waiting for a better one. And you'll see it quite firsthand. Another thing I wanted to mention before we kind of move on to explaining it, to explain obviously when you should kind of transition from mechanical to discretionary, is obviously experience. Now we've said with time you want to be trading live for a while, but it doesn't just come from seeing the candles. It doesn't just come from your back testing. It comes from data collection. So journaling. Every day you're journaling, not just from seeing those candles form over 6 months and seeing all the stop losses and thinking, oh, okay, maybe I should wait for higher confluences or more. You actually, every time you're having a stop loss, you're writing down for example, I am anyway. I'm writing all the confluences as to why I got in. And then I'm writing the trade, I'm explaining it. So in those 6 months, I've wrote every reason, I've explained every trade to myself and wrote all the confluences down on a page. And over time, you start realizing, hold on, I only clicked like four confluences for this trade, whereas like all my winners, I'm always clicking like 8, 10, 12, all these different things. And you start realizing, the higher confluence trades tend to be the ones that work better. Okay, the ones where I've maybe sat on my hands a bit more, the ones where I've got the more conviction, the ones where it's in line with direction. However you trade, you start to realize these things. And then it's not just I've done a load of back testing. It's not just I've done 6 months of like looking at the market. It's actually I now have the data. So if you were to go through your journal or your data collection, you could actually look at all your losses and go, oh, and yeah, wait, all my losses, they've basically got no, not really a lot of conviction. Yeah, it was a liquidity sweep, but like, what was the context behind the trade? Well, there wasn't any. Okay, maybe I should wait for trades that have context. And that obviously can be many things, high time frame and so on. But without getting too in depth with that, discretion comes from a multitude of things. And like everything in trading, you have to have all the right habits in place to truly propel and get to that pinnacle of being profitable. You can't just be undisciplined, inconsistent, and impatient. You can't just be journaling every now and then. You have to be doing everything consistently over a period of time. And eventually you get to this peak, which is how professional traders trade. They're not trading every day. Do you think pro traders are trading mechanically? You could argue yes, because they're still taking the mechanical trade. But when they say they're taking a handful of trades every month, do you think that is discretion or mechanical? No, I reckon that's discretion because I can guarantee they probably had double, maybe triple the amount of setups within that month. And they've just, nah, I'm good. I want to have this week off. No, I don't like it. I'll wait for what I like. And they probably take three, four trades. And because of that discretion, their knowledge, their trusted conviction to make that discretionary choice, they're taking the right trades and they're able to be profitable. So the when is about knowing the right time. You have to
Yeah.
have the data behind it, the back testing. You have to have read your business book. Isn't that right?
There you go. I think the key to it is being, I think you hinted on it, is being happy with your losses. So when you're trading, like Tom was saying, if you're seeing that your losses only have, for example, four confluences, whereas your winners or majority of your winners have like somewhere between 8 to 12, then next time you have a setup where there's only like 3 or 4 confluences, you're not going to be happy with that. And then say you take that and it L's, you're not going to be happy with yourself. And the way we want to be viewing trading, as I've just kind of heard from a Colin Yerkesin video, if anyone knows him, he's a crypto trader and meme coin trader actually. But you don't want to be letting trading affect you emotionally in the short term. A lot easier said than done. But if you're having trades that you don't want to be taking and then you're Elling on them or losing on them, then you're going to feel bad. It's not going to feel that nice. Whereas if you're taking trades with lots of confluence, exactly the same as all your other winners, then when they lose, you're going to be able to like deal with that. You're going to be like, well, I took the right trade. I've done this many times and it's won every time. Just these few times it's lost. Okay, now if I keep doing the same thing, l- literally probabilities and statistics say that you will win again and that you will come out on top. So it's about being happy in the long term with your trading and being unaffected by your trading in the short term, as in the intraday and taking each trade.
That that is like perfect. I think another way to add to that is it's just about confidence. You to
Yeah.
trade with conviction or discretion, should I say, you have to be confident. If you're not confident as a trader, if you don't have the thought that I can basically take trades, I can be profitable, I can do this for a year, if you don't have the confidence, full stop, you're gonna struggle with conviction, with discretion, sorry, because you have to be confident enough to sit out trades. First of all, you have to be confident enough to sit there, maybe watch a few trades, hit take profit, and I've done that multiple times. So, for example, last week I had a trade where I was like, I like this mechanically, it is valid, and I actually got in, and then I was like, wait, no, discretion. I'd rather just wait. So I got out and it ended up hitting TP, but through my discretionary choice, I managed to get another entry, hit my same target anyway. The point being is if I didn't get another setup, I was still happy with that decision to get out and sit there and watch it run. I had a very good feeling it was going to run, but it's that thought of I'm confident that this choice, there might be another time where this same setup will occur, I will SL. So you have to be confident in it. You have to be confident in your ability to say, well, I can take 4 trades a month, and I know I'm going to one bang every single one. Maybe you'll have a loss or two, fine. But you have to be confident in it. Discretion is all about the right time. And it can work both ways, which is something we do need to cover. Now, discretion is great when you get to that point where you are confident and you know you're profitable. You don't just have the data and a few months experience. You know for certain. You've passed a few accounts or you just know because no one else can know for certain if you're profitable or not. It's all about you in your head and your edge. Now, if you're not fully confident and if you're not fully ready to be a discretional trader, it actually backfires and it goes the opposite. And this did, if I'm honest, happen with me. And I know me and Ed discussed this last year when I first tried to transition to being discretionary. It works both ways. So sometimes when you're trading mechanically, you may miss the odd setup anyway. You may just not take it. Naturally, you have a bit of discretion. However, with discretion, I was becoming more eager to get in. I was like, okay, yeah, I'm confident. Yeah, this. And I was taking more trades because my discretion flipped. It wasn't just right, I'm going to take less. It can work both ways. It can go from less is more to or more is more. And you can have discretion in a way where you think you know enough, you know your strategy, you know, well, if I did this, it'll work. However, in trading, less is more. Now, with discretion, you need to be careful. Discretion is there to save you and actually save your time and energy rather than to make you take more. So that is the one thing we do have to make clear is discretion you have to be careful with because
Of
discretion
course.
you can use to justify bad trades. You can use discretion to justify maybe stupidly long targets and go for a 10R when you know in backtesting you never went for more than I don't know 5, 6R and even that R is rare. So for example, my 1 minute silver bullet on NAS, my average R is like 2.5R. If I'm going for a 10R unless that is like clear as day, I shouldn't be taking that. It's almost a warning of how good that too good to be true. So you have to manage yourself with discretion, and that's another thing. You have to be aware with yourself. You have to realize sometimes we can get ahead of ourselves. Sometimes we can want to just jump the boat, get to this discretionary point. Oh well, this is how TGR, this is how these guys do it. Yeah, I want to be discretionary, but you have to take it chill, and you have to trade mechanically until you know you're ready to be discretional.
Yeah.
And I do have another example with this. So besides, I now trade gold discretionary because I've traded that for over a year now. I know the system light and day. It's at the point where it's almost just swing trading now. That's how rare I trade it. Literally a handful. I think I've had 3 or 4 trades this month, for example. But the example I have is the 5 minute and the 1 minute I trade on NAS. The 5 minute on NAS is completely mechanical. There's basically nothing for me to adjust about it. And there are setups in there often, which are SLs, and I'm like, I don't want to take this. But I don't know yet, just because it doesn't have enough trades, I've not got enough experience, whether I should discretionarily stop taking those. Whereas with the 1 minute, I've been trading it a fraction of the time. However, because it has far more volume, far more trades, I actually have been able to develop my discretion more. So I've been able to actually learn which trades I should be taking and shouldn't with the 1 minute simply because I've had more experience just in the 2 months of live and all the more backtesting I've done than the 4, 5-ish months I've done on the 5 minute. I've chose to not go discretion with the 5 minute because I'm not confident enough yet to do it with that. The 1 minute, on the other hand, I know I've got the experience and I you can just spot way quicker with time with the journaling because there's a lot more to journal for the 1 minute anyway. There's far more things you need to be paying attention to. So there's an example for you firsthand of how you have to choose and be aware of when you should be going mechanical to discretion. You need to know the time is right and be going almost slow and steady with it, not making rash decisions. So I don't know if you have anything else to add before I maybe add an example or show an example.
Yeah, well, I was going to say, I guess the things we can't stress enough. First of all, is discretion isn't a reason to get in. It's always a reason to get out. You
You
shouldn't
said
be.
that to me a lot last summer, I
Yeah,
remember.
I did. I said it to him a
Yeah.
lot, and I was right. I hate.
Yeah, he
Well,
was.
actually, no,
No,
I'm
you
not going
were.
to say I hate. I fucking love being the big dog. No, I'm kidding. But I was right, and discretion isn't a reason to get in. It's always a reason to get out. You shouldn't be going. I discretionarily think I should take this trade that I don't like because I'm losing right now. That is a bad idea. Don't be doing that. Discretion is always, hmm, I have a trade right now, but this opposes me, and this opposes me. And most times I've seen these things oppose me, I have stop lost. It's not a, oh, this is kind of a setup, but not really, but I really want to be in. I just kind of think it's going to go up. That isn't discretion. That's gambling, essentially. You are now gambling. You're not following your strategy. Whereas if you're removing certain trades, you are still following your strategy. There's just discretion as to how much you're following your or how much trades you're taking. Your strategy hasn't broken at any point. It's still all the same trades. It's just which ones you're taking. The other thing that Tom has just been talking about is when. When you should do this, there's no way of being like, oh, on this date in this year, this is when you should switch over. But what I will say is when you should be looking at going discretionary is when you start really seeing yourself almost calling SLs. And this doesn't mean over like a 3 week period you called like 4 out of 6 stop losses. That doesn't mean you're some master guru who can call all your stop losses. I mean over a period of, I'll use it in trades, say something like 50 trades. If over that period most of your stop losses, you've been able to go, oh, I don't like this, but I'm still trading mechanically, so I'm going to take it. But this is the reason, this is the reason, this is the reason. If you're writing that down, really analyzing it in your journal, and noticing that those things usually result in a stop loss, then you can start transitioning. And there's nothing wrong with not transitioning to being discretional. If you really want to just keep going mechanical and keep going mechanical because it works and it's easier, if you're at that point in your life, stay mechanical. You can always make your money and then go discretional afterwards. And then when you're going discretional afterwards, you're safe because you've got your money and you know what you're doing more because you're a trader who can make money from trading. So don't rush into going discretionary. There's nothing amazing about it. It just helps.
I think you made a really good point there about you don't even need to like go
Yeah.
discretionary. And that's again another thing with the 5 minute. 5 minute is so easy to do. It's almost like I actually couldn't care if it SLs and it's almost like being picky and it's more effort to almost decipher whether I want to take these positions. It's more just cognitive load. I'm having to think, oh, yeah, this might SL and sometimes it's just easy to just have a trade you set and you just forget about it and you know long term it works. Like I was saying, you don't have to do it. Um, and a way of knowing, for example, again, the past few weeks with the 5 minute on NAS, I've just been pretty much calling all of the SLs. I've been like SL, SL, SL. And if I haven't, the trades I've been getting out of, been SL'd on, they've wicked me out and then ran my way. So it's the L's that you're calling. So you can't call every L. You can't call that you're just gonna get ticked out and it'll run your way. But when you're seeing these setups, like in our instance, it's always a bearish move, creates a fair value gap, and I'm there like, this is a retracement, but mechanical. And to be fair on it, there are times where it has done some bangers, and it'll tap and it will run your way. So one thing I tried yesterday, which is something I've been discussing with Ayrton, try trade these positions where I think they're gonna SL anyway. is, for example, I drop down to 1 minute and I adjust my 5 minute entry to a 1 minute fair value gap just to give a little better RR. Because when you're basically expecting it to lose anyway, the logic is, well, I might as well just try and make the trade a little better. But even that, it might as well just stay mechanical. Or you might as well not take it at all. So the right time is key. And again, you don't have to do it at all. You have to there's no right time. You'll know the time, I guess is the when.
I mean,
And
I think a really good way that I've just thought about to think about it is imagine a painter. Like everyone who becomes a painter, for example, obviously not everyone, loads of
mm,
them watch Bob Ross, and you'll see videos of them following his brushstrokes, doing this, and then they produce the same piece of art he's done. Bob Ross is your back testing in this example. When they become painters, their art adapts, it changes, they paint differently, they look for different bits of art. That's exactly what you're doing. So the Bob Ross stuff is all your back testing. When it comes to being a painter, stuff changes. You don't have to do the same thing. And sometimes trading does feel like art, especially when you get
mm.
setups like this one here. Like that feels like art.
I did not even realize I was screen sharing the whole time, so
I
apologies
thought
for
you
that,
were just
guys.
flexing on us.
No, I went to put the screen share on to prepare it. I did not realize. So yeah, trading is art, and that's what makes it so satisfying. And I'm sure for many other people watching this will agree. It's why it's so nice when you kind of get in a rhythm with it, when you're good at it, because yeah, it's like making a nice piece of art. It sells for a lot of money on the auction, and you're happy with it, aren't you? So talking about art and discretion, I'm going to show you today a first-hand example. And for example, to kind of prove it, we obviously live stream our Silver Bullet when I'm trading this, and me and Nat are trading the Silver Bullet every day for the traders group. And for example, I believe one or two of the members, they asked me why I didn't short at this fair value gap here. Now you can't see because I think my indicator's off for some reason. Put it back on. There we go. So you can see within this line here, and this line is the Silver Bullet. So I'm looking for simply a liquidity sweep and a fair value gap. That's how I trade the 1 minute. So I had my SMT, a liquidity sweep, and a fair value gap occur here. Now, discretion, despite that mechanically being a great setup, I decided I don't want to be in that. It's not a good risk to reward ratio. I don't even get 2R to my target. Yes, I would have got 2R, but ultimately SL'd. So my discretion saved me from a loss. Is the first thing. That's the first amazing thing about discretion. It's to keep you out of trades. Now, I, without market experience, without lots of back testing, without journaling, without just being able to gain and develop my own conviction in the market, I would have not known to not take this trade. So discretion comes with just also logic. It doesn't just come from experience and past experiences. Discretion comes with what is also in the present moment. So like I was saying, what things are against your position, what things are not in your favor, because they also matter in terms of making a discretionary choice. So for example, I had this SMT here, ES swept all these lows. I didn't like how it didn't tap this 5 minute. I just saw this as yeah, not a great risk to reward, not a great trade. I wanted something better, and I was happy waiting for the breaker structure if I really wanted to get in on it. And lo and behold, it actually swept the high, created an SMT with a double inversion, creating the most like perfect setup I could have asked for. So in this instance, discretion kept me out. It then helped me avoid a loss, then setting me up even better for the setup which, well, I'd say you should have taken in the first place if I was trading mechanically. Trading discretionary, I was able to sit on my hands, wait for something I was happy, I had my conviction behind, and that was the move I had. So that's not just the only example. Another example would be this move here. For example, we had an SMT on the low, so likewise, contrary liquidity sweep. So although this did hit perfectly 2R, which is lovely to see. The reason I didn't take this is because we didn't tap into a 5 minute fair value gap. So discretion works both ways. Technically, I avoided a win. Would I have gone for perfect 2R? Maybe not. I honestly couldn't tell you. The point being is, I didn't take it for that reason. I wouldn't know of where to target. I wouldn't have had that conviction behind it. Despite technically being off a liquidity sweep, this SMT, with a fair value gap, yes, valid trade, discretion wise, I didn't have the conviction. And if that hit SL, I wouldn't have been happy.
That's
Like,
exactly what I was about to say. I was about to say, as we were going off what we were saying before, if that had stop loss, I can already picture Tom sending me a message like, "Oh, I'm such an idiot," or
hmm
something like that, because like he wouldn't have been happy about taking that because it didn't have all the confluences, like we were saying before. It had the confluence of a SMT and a fair value gap, and I guess kind of a liquidity sweep, but not properly. But it hadn't
yeah,
hit that 5 minute. It wasn't a proper liquidity sweep, and it wasn't in the direction that was looking for. So if that hit stop loss, I know you would have been kicking yourself. You would have been like,
yeah. And it's the same for that short. And a way of looking at it is your strategy, your system, your model, the things you use typically are all going to have like core foundational concepts that is basically how you look for a trade, how you get into it. Now, typically, I presume for most, I mean, obviously, I know you have trend continuation and a lot of other malarkey. Let's just say you're like me and Ayrton, you're looking for a liquidity sweep and a market structure shift and a fair value gap. Those three core concepts, they're great, obviously, that's what it's all founded off, but you can't just take a trade off every liquidity sweep, market structure shift, and fair value gap. That's the simple way of putting it. Now, mechanically, when you're first starting, kind of need to stick as close to that as possible because you do need to focus on just actually spotting them, taking action when you see them. But like we were just saying, you need conviction behind your trades as well. You can't just be taking every liquidity sweep, fair value gap, blah blah blah, because not every single one of them is actually going to have an SMT off a 5 minute, got an inverse, all these other things. So yes, this was nice, and technically I didn't even really look at that inversion too much. Had the inversion, like Aaron said, if that stop loss, I wouldn't have been happy with it. But when you have more conviction, so more context, you get an SMT. I view that as a classical fake breakout. So you got your breakout traders here. So yeah, a breakout to the outside, the 5 minute candle close up here. They're looking great. Boom. SMT, double inversion. After I it liquidates one of my old positions, I know not only sellers who were just thinking like I were, just got taken out, but now I've got even more conviction behind my trade. So discretion, like Ken said, is not to put you in, but is to keep you out. And discretion benefits you in ways you can't comprehend because by being discretionary, you actually give yourself the freedom. Freedom is the key thing here. The freedom to choose the trades you want. Now, being mechanical, you're almost forced to take every trade, which again is not a necessarily negative thing. But when you're being able to be discretionary, like we're saying, it's art. You get to paint your picture. So, yes, there was a sell. Yes, there was a buy, but I didn't want to sell that. I didn't want to buy that. I want to sell this. Boom, done. Hits take profit. Great. And then you look back, you missed a stop loss. Maybe you missed a little win, yes, but ultimately you took a trade you were happy with. You're a sniper. You're not meant to be like a at the market every day. You want to just be there, target eliminated, done. So,
another thing you can see from this, which I'm sure you'll back up, Tom, is before when I was saying that in the live markets you get a feel for the markets, if you leave it there, I assume that when this dropped off here, I can already tell by how these bottom candles look, but these candles were probably very, like this one would have been going up and down a lot. This one you can clearly see rejected straight upwards. Now I know
uh,
that
yeah, there you go.
some of the worst drawings ever, but you would have also had, as well as not being happy with the trade itself, you're also seeing that price is not liking going down. Whereas right here, it was straight down, left the imbalance, and we've got a nice setup to get into that's more happy. So that is another reason for not wanting to get in because in the live markets, you can also feel that price doesn't want to go this way at this point. So you can wait for the one that has more confluence. Price wants to run, and these are all things you grab a feel for after trading the live market a lot. These aren't things you can just jump on the live market and know. You can have them in mind, but you need to learn them for yourselves because all of us have different discretion, and that's why everyone trades differently and everyone has different ideas. For example, the guy Tom mentors, he took that if you draw that on the the buy that Tom didn't, and
Oh,
obviously he
what's it?
came up with profit, which is great. Tom had reason not to get in. He had reason to get in. They both, I guess, painted their different pictures and both came out with profit. In fact, they literally did the opposite positions and both came out with profit. That shows you how discretion works. Both of these guys are trading off their own way of looking at it, and both of them avoided the first L, and they got in on their wins. So I guess that's probably
Yeah,
a this is a really good
that
example
is a
for
good
wrapping up
example.
this whole like today's trade.
Yeah, no, I mean that's a really good point. You don't need to trade it the same way as someone else does. It's all about your edge because ultimately you can stop loss. Like let's say he stop loss and I won. That doesn't mean I'm better than him or I'm right and he's wrong. As long as both of us as individuals are confident enough and know in ourselves that long term our approach and our edge in the market is profitable, then it doesn't matter. Because there are always two sides to the market, so you got to remember. So, for example, this 5 minute here, how this did not get tagged with this wick. Now, you could look at that two ways. You could look at that as a seller and you could be like, oh, this fair value gap, it's not wicked. It's gotta tap this and then short down. It's got to. Or you could look at it as a buyer, okay? And you can be like, okay, it's not tapped here, but it's done an SMT and it's inversed this. Oh my God, yes, it's a buy. There's no way. This is so bullish. The fact that it's just not tapped into this level. It's got to be. So it's only through market knowledge and intuition. My view on that was, okay, I know sellers want to be involved because they want to see at least this being tagged. But I also know buyers are involved now because it hasn't been and the SMT. So there's even more reasons for my discretion to be like, hey Tom, just wait it out. Wait for there to be a clear shift in the market where there's a side to the market that you want to be in on. So discretion comes with time, and it's not something that any of us can teach. We can never just unload all of our knowledge and be like, here you go, here's discretion, my friend. ICT cannot give it you. TGR, no matter how many videos you watch, how many podcasts you listen to, something um, I actually made a post on my personal Instagram today, and it's just applied. There has to become a point where you stop listening, stop watching, and just do. You have to go and make things happen and learn by taking action because you can only have so much motivational videos put into your mind before you have to just go do it because you're never always going to be motivated. You're never going to be able to get discretion, this conviction, this context, this knowledge by watching videos and backtesting equally. Backtesting does teach you to a degree, but like I hadn't said, I had 3 minutes to watch these candles form. In backtesting, in the click of 3 seconds, not even that, tap, 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 done. Three candles. Do I like that? So maybe even backtesting, I would have taken that. Who knows? There's a potential I would have. But again, like Ethan's story, linking it back, you read a business book, you have these losses, these lessons. Doesn't mean you go and go into the live market. Ah, well, I would take it back testing. Click, click, click. Stop loss. You think and you're like, okay, in back testing, yeah, I probably would have taken it, but hmm, this isn't back testing. Uh, I've just seen this form. I've got all these convictions. I'm taking more time to look at it. Hmm, I'll wait for a better setup. So. Conviction is almost like the reward for experience and commitment to the markets, to trading. And conviction and discretion is different to each pair. You have different discretion for different markets because you develop a relationship. Sounds cringe, but you do. You understand a pair better than the other. I'm gonna go, let's say I was gonna go trade the S&P 500. I'm gonna have no discretion at all, if I'm completely honest, because I don't trade it. I have no idea. Same event was come trade the Nasdaq, but Ant's been trading the S&P. He's going to have discretion. I've been trading the Nasdaq. I've got discretion because it's experience. It comes with time. So yeah,
Don't rush to go get it. Just
yeah,
wait till that happens, and it'll be way more rewarding. But it's a good thing if you're listening to this that you're aware that it comes and you're aware of how it comes, because I think a lot of creators you'll listen to will just tell you, oh yeah, I've got discretion now, and yeah, that's just how it is. I didn't want to get in this, and you'll be thinking, oh right, that's how he does it, so I'll do the same, and then you'll start avoiding trades for no reason, getting in other trades for no reason, just because you've heard that your favorite trader does it. It isn't something we essentially do. It's just happened now. Like we
yep,
traded for so long, seen so much happen, especially on our forex pairs, that like there's things we've seen happen over and over again because we essentially haven't missed a candle in our sessions for the last like 2 years. Well,
Yeah, on
actually, I'd say
gold.
like a year,
Yeah, a
year and a
good two
half.
years.
Yeah,
I mean, for gold for me, G for you.
yeah,
Yeah, I mean that's the best way to put it. You know, you've seen the candles every day.
yeah.
How are you not going to learn anything?
There hasn't been a single day where I've just gone off the markets for the sake of it. The only ways I've been off the market is that the market's been paused for a holiday. I've seen it every single time. So I don't necessarily know, but I have a very good probability based understanding of when not to get in. And that's
Yeah.
essentially the best way of putting it. So I think go
We literally send screenshots daily almost of fake setups, of
Yeah,
setups that technically, mechanically, our strategy we should be getting in, and
yeah,
then we send it. I'm like, this is cap. 2 hours later, I'm like, this nah, and humble me, please, because it gets to a point where you know your pair, you know your market, and I'm not saying you're gonna know it every day, and I'm not saying you're gonna be right every day, because there's times where I sit out a setup, and fine, it hits TP1 maybe and whatever, but it gets to a point where you just know, and then it becomes easy, and that's when you're able to actually enjoy trading at its fullest. So trading's meant to give you freedom, and if you're trying to trade mechanically, the likelihood is you're gonna have to take every trade, and you have to be there every single day. But with discretion, you can wake up in the morning, do your morning routine, look at the charts, and be like, terrible conditions. The likelihood of me getting a setup, not a lot. I'm gonna go about my day more. You look, you you know the conditions are terrible. You're not feeling it. I don't just mean feeling. You're not feeling like a good day. I mean you're not. The market, excuse me, isn't giving you a good. There's not conviction, and you get to set up. You're gonna be there like this guy. He thinks I'm gonna put on your phone, go about your day, and you come back later, the majority of the time, you're going to be profitable with that approach because you
yeah,
know enough that you're just avoiding an else. And it's not breaking your strategy to link all the way back to the start, which Okan said. Would that be breaking your strategy? No. It's actually performing your strategy at the best way possible because ultimately your strategy is an edge over the market. So you got to understand it's an edge. You are an edge. And the more you refine it, and I'm not saying analysis paralysis, continuously trying to improve, but it gets to a point where you kind of reach a pinnacle, and that is discretion. It's taking a handful of trades every now and then, or your system just provides it so many that you don't need to be discretionary, let's say, and you're able to enjoy trading at its fullest. You're able to go traveling. You're able to just take the odd trade here and there. I mean, I experienced that firsthand in Thailand with gold. Again, I took a handful of trades the entire time, and it was something nice. It actually meant I could enjoy my traveling without having to sweat about looking at the market as much as I would have done 6 months before then, where I was like mechanical. Gotta look at it for 7 to 3 p.m. every day. Gotta look every single, just check. Just set up, take it. No, no hourly fair value gap. Not in line with the daily, and so on. So discretion is like the the final stage you get to where you're truly able to maximize your strategy and get the most from it. You
yeah.
stop taking the losses, the bad trades.
If there's one last thing I can leave you with, it's that trait discretion isn't feelings, it's reasons. You don't need to feel like you don't want to get in just because I don't know you woke up late or something like that. Like it's not feelings, or if you just looked at the market once and gone, "Oh, this feels like a bad market," that isn't a reason. You have to look at the market, go, "Okay, this morning, what has it done? Oh, there's one fake setup. There's another fake setup. We've just kind of gone sideways. We're not at a POI, but it's given me a technical setup. I now have reasons to not get in. It's not just because I feel poo that morning. You actually have reasons. You're just trying to counter your trade, playing devil's advocate, and this time the advocate has won, so you stay out of that trade. And that's probably it wrapped up.
Yeah, final thing is there's a difference between feelings and intuition because intuition is a feeling and we can't ever fault that. But like Ken said, if you're waking up and you're feeling like sluggish and all that, you're more likely just to just try use discretion as a reason not to trade. But if you're waking up, doing everything as normal, and you're feeling like this is a a fake setup, you're feeling like your intuition is saying, "Hey, I've seen this before." That's different to just like we said. Oh, I'm not really feeling like trading. So I don't really want to take. Oh, I don't want to feel the stress of a trade. That's different. So you have to be in tune with your intuition. And
Yeah,
again, comes with time. So
exactly. Right.
right.
We'll wrap it up, guys. This is going to be on YouTube, so if you're watching it there and there is any questions you have on it, put them in the comments or put it in the community, wherever you are. Just let us know your question and we will get back to you and we will give you an answer. But yeah, that is discretion and mechanical systems wrapped up.
Thank you very much for watching, and whatever time you're watching this, hope you enjoyed. Leave some feedback, and happy trading.
Yeah,
Enjoy
happy.
developing discretion.
Thanks for joining Josh and Okan as well. I think he had to dip because he was driving.
Yeah.
So probably the safest thing to do. But yeah, thank you very much for watching, and we'll see you guys next time.